Hello friends, this is Dr. OG Crypto, your mentor and your tutor for your trading journey. I'll be introducing you to the best forex and crypto trading course for a total newbie or an amateur or a professional trader. My goal for creating this course is to make it for free and even make it more relatable or better than any trading course that you can get for $1,000. So, going by our course syllabus, we've covered a lot. So we are now currently at indicators used in crypto and forex trading. So that's what I'm going to be explaining for us today. So without wasting much of our time, let's dive straight into it. So what are the powerful indicators that you can use whether for your forex or for your crypto journey? There are a lot of indicators out there. Once you check your trading view, check under indicators, we have like over 100 indicators. We have over 100 indicators that you can actually use, because these indicators are being created by dev for them to make their work easier, to make their trading system easier. So we have various and thousands of indicators out there. Some of them are free, while some of them are paid. You understand? But I'm just going to be introducing you to the important ones and the ones that I've tried that are working. You understand? When I was still trading indicator strategy. So another thing is that if you like, you can just be using indicators to take your trades, or another thing is that you can be using indicator to as a confirmation or as a confluence to part to your strategy that you are using to before you can place any trade. You get? So without wasting much of our time, let me just list the important indicators that you can just look for. So we have simple moving average indicator. You can go for, there is also RSI, that's relative strength index indicator, and you can go Bollinger Bands indicator. There are still a lot. You understand? There's volume indicators. There is we used one the other time, watermark. If you want to add your name to your chart, we use that one too. So there is MACD indicators. A lot of indicators out there, but these are the common ones and the most these are the powerful ones that you can use, that even as a beginner you can understand it. As an amateur trader, you can understand it. As a professional trader, you can add it to your chart to make it more as more confluence. You understand? So that is that. So let's take it one after the other. So simple moving average. So just go to indicators aspect and search for simple moving average. Simple moving average. So can you see we have a lot of simple moving average. Just pick the first one that they recommended for you. When we get to Bollinger Bands too, you add it, and so on and so forth. So that is that. So let's start with simple moving average. So this indicator, simple moving average, what is the importance? So let's add it. Once you search for it, simple moving, just click on it once. Once you click on it, you see it has added already. It has added. You understand? So you see this line, this blue line that you are seeing is what we refer to as simple moving average. So what is the importance of this indicator? The importance is that it helps us to identify the market trends. We have three trends in the market. The market can either be in uptrend or go downtrend, or be stagnant, or let me say consolidation market. You don't trade consolidation, you only trade if the market is going uptrend or downtrend. If it's going uptrend, look for buy opportunity. If it's going to downtrend, you look for sell opportunity. But this simple moving average will now help you to know that, okay, this is where if you see it around this place, you need to buy. If you see it around this place, you need to sell. So it helps us to spot the direction of the market early. So you quickly know if the market is about to reverse and start going up, or is about to reverse and start coming down. So that's the importance of simple moving average. So how do you add it to your chart? To add it to your chart, just go to the indicator aspect and search for simple moving average. Once you see it, then click on it once. You understand? So it will bring SMA 9 for you. So it brought SMA 9. You understand? So what this SMA 9 means is that what is a 9 days moving indicator. Is a 9 days moving indicator. That is, every 9 days that the market is moving, that's the information that it is consuming. You understand? So, but now for you to actually use this SMA to place trades, before you can use it to place trades, you need two of it. So you have to add two indicator to it. You have to add another one again, another simple moving indicator or two. Still add it once more. You see now. So we now have two. So we have SMA9, SMA9. You understand? So this is it. You can see that it is two indicators that are there, but because the two of them are 99 days, that's why it's showing as if it's just only one. So the next thing you will now do, if you want to be using simple moving average indicator for placing trade, is that you edit the two SMAs. We will edit 1 to 50 days simple moving average, then you edit the second one to what? To 200 simple moving average. So now let's edit this one now. Just go to settings and change the 9. Change the 9, change it to 50. Change the 9 to 50. 50. So can you see? It's now SMA 50 now. So you see that it's giving us two colors. Two moving averages now. So the second one, change it to 200. Change it to 200. So change this one to 200 moving average. So then change the color. Once you change to 200, change the color to, let's say, red. Let's change the color to red so that it will separate, it will differentiate one from the other. You understand? So can you see now? So the SMA 200 is the red color. You see, then the SMA 50 is the what? Is the blue color. Now, what is the importance of this two colors now? What does it mean? Or that 50 and 200, what does it mean? Or why did I say you should change it to 50 SMA and 200 SMA? That SMA 50, it shows that it's a 50 days moving average. So what it shows, SMA 50 shows, is that it shows a short and intermediate time interval. You understand? It shows a short and intermediate time interval trend of the market. Why SMA 200? That one shows 200 moving average, 200-day moving average. So it's like a long-term market trends. So it tells us where the market is going in a long term. If you look at this SMA 50 now, you see that it's going up, coming down, going up, coming down. It's telling us that the trend is moving up. It will retrace a little bit, it will move up, it will retrace a little bit. But the SMA 200 long term is telling us that overall the market has been in what? In uptrend. So how do you now use this indicator? How do you interpret this indicator for you to make profit? Is that you have to always look out that anytime this SMA 50 crosses SMA 200, that's when you want to take action. Anytime SMA 50, which is the blue line, crosses the red line, that's when you want to take action. And one thing that I want you to know about this red line is that you see that it's just moving as if it's just moving on a straight line. It's just moving as if it's just doing its own thing. You understand? It's moving as if it's doing its own thing. Why it is SMA? See that it's just moving as if it's doing its own thing. Why it is SMA 50 that is doing its own zigzag, is the one doing the crossing up and down. You understand? So you have to look out for when this SMA 50 is crossing. Is it crossing from the upside? Is it crossing from the downside? You understand? So you have to note that. You have to note that. So let's now look for it now. So anytime your SMA 50, anytime SMA 50 crosses SMA 200, so you have to, that's when you want to take trade. That's when you want to take trade. Because now, so if it now crosses above it, let's say it's coming from down and it now crosses above, it crosses the SMA above, it shows that there's strength in the market. So you should be looking for buying opportunity. You should be looking to long the market. You see that at this point, you can see that the market, this blue line, which is SMA 50, crosses the red line. So at that point, I'll be looking to buy. I'll be looking to long the market. You see, so if you long the market, you can see the profit. You understand? So anytime the SMA 50, which is the red line, crosses the blue line, the red line again, I will be looking to sell the market. So at this point, I'll be looking to sell the market. You understand? So let's look at examples. I've done some example. I've looked at for some examples so that I will not take much of our time in the video and you will be able to comprehend it very well. So let's look at the first example. You can see that here at this point, the SMA 50 crosses above. You see, like the SMA 50 was coming from under, then it crosses above. Immediately it crosses above, you have to trace it to where the current market is. Then you click on long. That is, you go and buy. You go and click on. You go and long the market. You go and buy. You understand? So in this point, I will go and buy BTC USDT. Once I see that this blue line has crosses the red line above, like it crosses it above. So at that point, I want to click on buy. You understand? Then I set my stop loss to protect the previous week. You understand? And what happened? Though the market first retraced small, but what happened? It later went up. See, now from that place that I bought, if I hold the trade up to this place, I will have made 5 RR trade. So it's a 5 RR trade. So if I enter the trade with $1,000, I will have made $5,000 from this trade. You understand? So anytime SMA, because in this case now, SMA 50 crosses above SMA 200. So that's your signal. So that place, you just trace that place to where the chart is. So that's your signal. So it shows that there's strength in the market, and that's a solid buy signal. So you buy. So I did that. I made, if I enter with $100, I will have made $500 from this trade. So that is that about SMA 50. Let's check more example. See this another example too. You can see from here too, that this is another example. You can see that the red line is going on its own. Then you see this the blue line coming from under. It was following it from under, and immediately it just crossed it above. So immediately it crossed it above, go and check that place. It's around this place. So I click on buy. So I'll buy. So then can you see the market first give me profit, it retraced a little bit, then it went up very well. So this is a 6.5 RR trade. This is a 6.5 RR trade. So it means that if I enter this trade with $1,000, I will have made $6,500 from this trade. You understand? So that is that, because the blue line crosses above the what? The red line. And that is, it shows the strength in the market. It shows that what? I should buy. Now look at sell, a sell opportunity. You see that the market was coming down. You understand? So this one was coming from under. Then you see that it has went up. So from that up, what do you see? It crosses down. So immediately it crosses down, you go and check it to the market. At this point that it crosses down, meaning that what? There is weakness in the market, because the blue line crosses below the red line, the red line. So I will go and trace it. So it's around this place. Then I will short the market. So this one is supposed to be a solid sell signal. It's sell. Sorry, I made a mistake. So it signifies that there is weakness in the market, because you can see now the blue line, it crosses below the red line. So this one gave a 4 RR trade, meaning that if I enter the trade with $100, I will have made $400 from this trade. Do you understand now? So that is it. So I've explained for sell opportunity, and also in a case of what? Long opportunity. So let's check more live examples where for short, let's check more examples. So you have to look for where blue line crosses below. Where the blue line crosses below is going to take much of our time, because we have to be looking. So see one example now. Can you see that this blue line came and crossed? So at that point that it crossed, you go and sell the market from there. You understand? You go and sell. See here too. Okay, this one is not for this one. Let's look at it. They did not cross, except here. This is the only place they crossed. This is where they crossed. You see that the blue line came to come and cross the red line. So immediately at this point, I want to sell. So I want to sell the market at this point. I want to short the market from this point, like this, where the market, this point, I want to short. I would like to short. You see what happened? I will make the profit up to this place. Then I will make sure that I protect the previous week. So this is the previous week, like this. So that's a 2.64 RR. So if I enter the trade with $100, I will like made $64 profit extra. So that is that about SMA. You understand? That's about SMA. So another powerful indicator that you can use in trading is what we call relative strength index. That's RSI, relative strength index. So go to your indicators. You can remove these ones. So to remove, just click on the delete. To remove the SMAs, click on the delete. You see that we don't have it anymore. So click on indicator and search for what? RSI. RSI. You understand? So you can see relative strength index. So you click on it. This one you have to do small adjustment too. So you see it will split your chart into two. It's going to split your chart into two. One will be up, one will be down. So your main chart will be here, while your other chart will be what? The strength RSI will be down here. So you click on this RSI and edit it. So go to the settings. Under the settings, remove the RSI based MA. Nothing concern us with the moving average. So remove or mark it like this. So your adjustment, you are left with just RSI. So this RSI, you have to change this 70. Change 70 to 80. Change 70 to 80 and change 30 to 20. Change 30 to 20. Then click on what? On OK. So like that. So that's the configuration of what? Of the RSI. So we are concerned with what? 80 and 20. So what does this 80 and 20 means? So we are going to be explaining it for you one after the other in the way that you are going to understand. So when we say relative strength index, what is the importance of relative strength index? What do we use it to know in the market? You understand? So we use a relative strength index to actually identify potential market reversal. We use simple moving average to know, okay, what is the trend of the market? Oh, market is going up. Okay, market is about to come down. You understand? To know the trend. But for relative strength index, we use that one to know that, okay, the market is about to reverse. Let's say market has been buying. Once you hit the 80 sign, 80 level, it's going to drop. Once you reach the 20 level, it's going to go back up. You see that he hits the 20 level. You can see the 20 level. What happened? It went back up. As once it's reached the 80 level, it will come down. You understand? So you just you will now look at it with the what? With the market, current market. Then you short. If Adimbi touch the 80, and once you touch the 20 like this, you will be looking just to go and buy. You see, if you buy at this point, because that's where it's touched the 20, you see you'll have made some profit. So that is that about relative strength. So it's used to spot potential what? Market reversal through two theories, which we refer to as overbought and oversold theory. When we say overbought, it means that the market has been going up too much. It's been going up too much. A lot of people have bought it too much, to the extent that everybody is tired. It's no more interesting again. So once it touched that 20 area, it means that it has been overbought. You know, when something is too much, over is not good. So people will now start selling. So once it touches the 80, which is the overbought line, the market will start selling. And once we reach the oversold, meaning that people have been selling this coin for a very long time, or this currency pair for a very long time, it has hit the 20 line. So that 20 line is telling you that it has been oversold. So you start buying immediately. At that point, you start buying. So that is this. So when we say overbought or oversold, it means the market has moved too rapidly in one direction for too long, and is due for a bounce back or for a reversal to the other direction. So that is it. So to add it to your chart, go to indicator and search for what? And search for RSI. Once you add it, then go to settings to go and remove the MA that is added to it. So now from 0 to, once you see anything from 0 to 20, it means the market is overbought. So you should be looking for long opportunity from that place. Once you see the market from 80 line go above, you should be looking at what? The market is overbought, and you want to start selling the market. You understand? So I look at some examples so that we will not take much of our time. So let's check this RSI 1. You can see that the market touched the 80 line here. So immediately it touched the 80 line, you should be looking for sell opportunity. So this is where it touched the 80 line. It means that it moved in this direction for too quickly, that is now overbought. So once you see it like that, it means that what, it's time for you to start selling because it has touched the 18 line. So you start selling. So I place my sell signal. So you see, though the market came to retest the place before you now give me my TP. So at this TP, I sold. So it gave me 3 RR trade. So 3 RR means that what, if I enter this trade with $100, I made $300 extra. So that is that. Let's check another RSI example. So you can see here that the market was just going up, going up, going up, going up. It got to this point. At that particular point, it touched the 80 line. So at that line that it touched the 80 line, that's a signal that, okay, this market is overbought. So you should be looking for what? For selling the market. So you click on you place your sell signal, and what happened? The market starts selling and hits take profit. So it gave you 5 RR, meaning that if you enter this trade and you risk $100, you are going to make what? $500 from this particular signal because the market hits what? The 80 line. So that is that about RSI. So we still have one more example for buy. So look at it now. You can see that it touched the 20 line. It touched the 20 line. So once it touched the 20 line, you should be looking to buy the market. You see that the market has been dropping. But once it touched the 20 line, it's over. You understand? So you look for buy. So you buy the market. So you buy. When I bought, I did 5 RR on this trade. So if I enter this trade and I risk $5, $100, I will have made what? $500. Why? Because the RSI 820, which is a signal for what? For buy. So that is that about RSI. You understand? There's also another one, which is what? Bollinger Bands. There are other types of indicators too. You understand? You can just read about it, go to YouTube, go and know more about it. But these are the ones that I use very well, that I've practiced, that are working. You understand? You can see the examples that I'm giving you up and down. So for the Bollinger Bands, what does the Bollinger Bands do? So with the importance of the Bollinger Bands is just to identify high market volatility in the market, or if there is a potential breakout. It's for us to know that if there is a potential breakout, that's what we use Bollinger Band for, is to know that if there is a potential for breakout, that is, the market is about to break out. So that is it. So how do we add it to your chart? Go to indicators and search for Bollinger Bands. Bollinger. So you can see Bollinger, a lot of indicators, but the one you are looking for is what? Bollinger Bands. So you add it. Let me first of all remove this indicator first, this RSI indicator. If you are using free version of TradingView, you cannot add more than just 2 indicators. So you can add just 2. It's only 2 indicators that you can add at a time. So I will search for Bollinger Bands. So can you see the Bollinger Bands? So it's still loading. Still loading. So it has added it. So these Bollinger Bands now. So these are a Bollinger Bands indicator. So it has 3 lines. It has the upper band, it has the middle band, and it has the lower band. So the interpretation, or how you can use this those indicators to actually make crazy money from the market, is that when the market touches the upper band, it's telling you that it's time for you to sell. Once it touches the lower band, it's telling you that it's time for you to buy. That is just it. You see that when it touches the lower bands, what happened? The market went up. Once it touches the red too, what happened? The market came down. So it's just more like a support and resistance. So that is what Bollinger Bands is like. It's just like a support and so once market touch it, it will come down. Once it touch it again, it's a buy. You see that here now, the market touched the red line. What happened? The market sold. At this place too, the market touched the green line. What happened? The market sold up to this place. So it's like you are using support and resistance. So that is that about Bollinger Bands. You see that the market touches here. What happened? The market sold. As it touches this green line back, what happened? The market went up. See it here too. As it touches the red line, what happened? The upper band, the market went down. As it touches this one, I did not really touch it. You understand? So I'll wait for it to touch it. So once it touches, that's when I will sell. See, it touches, then I will buy. Immediately it touched this place, so I'm looking to buy again. So if you buy from this place again, up to, can you see? You make your profits up to this place. You still touch it here again, what happened? You will sell. So that is that. So let's check more practical example that I have screenshotted for us. So you can see the market touches the upper band for here in this place. You see what happened? The market sold. The market sold. So this is a 4-hour trade. If you risk $100, you are going to make $400. Look at here too. The market was going. It touched this place. What happened? The market sold. So this is a 10-hour trade. So if you use $1,000, you make $10,000 from this trade, just from this single trade. So that is that about Bollinger Bands. So now there are still other indicators, as I've said. There's volume indicator, there is MACD, and so on and so forth. Type of indicators, you understand? But the ones that I use very well are these three that I explained to you, and I've explained how you can add it to your chart and what all of them uh, are used for. You understand? So now, what is now the risk management to this indicator type trading strategy is that you don't use just one indicator. You don't use just one indicator to be doing your analysis. You can combine it with maybe two indicators together. You can be using maybe simple moving average and RSI, so that to confirm, okay, this thing is true. If the two of them are telling you the same thing, then it's telling you that, okay, it's time for you to buy or for you to sell. Or you can use simple moving average and Bollinger Bands, or using any one of the three. Make sure that you don't use one. You can combine one or combine two. You can combine two or combine three, and so on and so forth, like that. Or if you like, say, you can use just one indicator and combine with other strategies, maybe CRT strategy, ICT strategy, SMC strategy, any strategy that you want to be using. You understand? So that you can make a more informed and a more solid trading decision. You understand? So you can also combine it with price action strategy, so that you can always be on the right side of the market. So because price action is like you are trying to know, okay, of course this market is long overbought, so I'm thinking it's about for it to come down, and so on and so forth, like that. So that about indicator trading. That's that about indicator trading. There are a lot of indicators, but get familiar with these three ones, and you can be using these three ones to make money, printing crazy money from the market. You see that I used the example on a forex pair, I used it on a crypto pair, I use it on USD JPY, I use it on Bitcoin too, so that you know that whether for crypto, whether for forex, they both works. So thank you very much, everybody. I'll see you in the next video. Bye.